Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our three-day Metals and Mining Conference. Our next presentation is from 1911 Gold. Please note you may submit questions for the presenter in the box to the left of the slides, and you can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Sean Heinrich. He's the President and Chief Executive Officer of 1911 Gold, which trades on the OTCQB venture market under the symbol AUMBF and on the TSXV under the symbol AUMB. Welcome back, Sean.
Thanks, Sean. Great to be here. I'll get going. Anybody who's wondering where that ticker symbol comes from, just so you know, AU obviously is gold and MB is Manitoba, so that's the genius behind our ticker symbol selection, and we were happy to be able to get it on the OTCQB as well. So for those of us joining us today that are new to the story, I will spend a little bit of time just explaining who we are, where we are, and high level what our strategy is. And then I'll try to get into the details a little bit, but leave time for the Q&A at the end of the session as well, because there may be a number of questions given the rapid advancement in terms of the company's outlook, strategy, and obviously share price over the last several weeks. So just to orient everybody, this first slide really captures kind of the essence of the company. You see here the permitted mill just in the center of the frame, the head frame itself going down to one of the four underground mines just to the left of that, as well as the admin and the site infrastructure just off to the corner of the screen. This is all permitted and obviously fully constructed, operational. We were actually running tailings through that mill as recently as about 2.5 years ago. So it's in great condition. We're currently working through it, trying to prep it as we are expecting to do some test mining in 2026, which we'll get into a little bit, and then get into full-time operations in 2027. So things are advancing quickly. We have people on the ground working hard to restore these assets back to fully operational status. So far, everything looks great. We're very excited and happy to see the progress being made at site. Forward-looking statements in here, there are a number of them. Obviously, we make a number of projections, which may or may not be influenced by external factors. So cautionary note to all investors that they need to pay heed to these factors and keep those in context as we go through the slides. So as I mentioned, this is a fully permitted operation. For now, all we really need to do is submit a notice of alteration in use, which is letting the province know that we intend to go into production. They're actually fully aware of our intent and our plans and are fully on side, given the support currently in the resource sector, particularly in the province of Manitoba, which is looking for these kinds of operating opportunities in order to provide jobs and obviously income for the region and for the province as well. This mill that you saw on the last slide goes to 1,300 tons a day, is currently configured. It has been expanded up to 22,050 tons per day. Those are long tons. Something like this in today's market, given lead times, prices, inflationary factors, is well over $400 million to build and construct, and plus a very uncertain and long time frame in order to complete. So it's a very valuable asset. And that's before we even start talking about the hundreds of kilometers of underground infrastructure and on-site surface infrastructure as well. We have an existing gold resource on this property. We updated it in 2024, 1.1 million ounces. During that process, we were able to identify a number of opportunities where that resource remains completely open, as well as identify areas on surface, which we can talk about, where it's been underexplored or not explored at all, but there was sufficient evidence either down dip or based on structural influences that there was potential for a significant resource to exist. On top of that, we sit in the middle of a very large regional land package, over 62,000 hectares, a number of prospective areas across that belt, very underexplored, similar in size, which you'll see to the Evolution Belt, which is about 100 kilometers to the east of us in the Red Lake camp. We have a very good social license here. I put that slide in there because we take that very seriously. We have strong community ties, both to the town of Bissett, the local Hollow Water First Nation, and the local Black River First Nation just down to the southwest of us, which really encompasses the lower part of our property as well. So we look forward to working with those groups as well as well as the province. So here you can see the share performance. We obviously set a very nice base for us over the last 12 months, steadily creeping up into the 30 to 35 cent range, forming a continuous base and resetting a price. And then coming into the month of September on the back of a strong outlook for gold, as well as a strong strategy of the company in terms of the restart and the plans in place to get to that restart, we saw a significant boost in the confidence of what we were doing, and as well a big flood into the shares of the company as well. We continue to see that appreciation, and we think the advancements we're going to be making over the next several months will continue to support and improve on that existing share price. We have a very strong shareholder base, with Eric Sprott taking a big position in the company and continuing to contribute to the company. Even in the most recent financing, we see an additional contribution from him. We have a large institutional base, a growing institutional base, which provides a nice backstop for the price of the company, provides a significant support in terms of future financing needs. And we also continue to have a wide distribution of retail underlying that as well, which obviously is a significant portion of our focus in terms of getting the story out there. Management team, very experienced here, all worked in operating mines or in development situations, so are basically positioned well to see this property through to production, as well as see the ability to support the development of other areas across the property into operating mines as well. Combined experience north of 100 years, unfortunately, in some of our cases as we get up there. So this is where we sit in terms of position. We are just on the western side of that Manitoba border. You see there about 100 kilometers to the west of the Red Lake camp. We sit on the same Birch-Uchi greenstone belt with that primary fault structure, the Wanapagao, which extends across the northern part of our property line, and then really kind of ring fenced by that Manigatogan fault just to the south of us. We have over 62,000 hectares, as I mentioned, very large land position, very underexplored. We see significant potential and opportunity within the existing underground mine, but long-term, we see several opportunities to the southeast, which we'll get into here shortly as well. So this is a zoom in on our property. Now you can see the outline in general. You can see the proliferation of historic producers, both centralized around the existing mill, which is right in the center, just up to the northwest, but also down to the north southeast of the property in that central Manitoba region. We see this as a two-pronged strategy here in the next 3 to 5 years, which is the development of the True North underground mine, which is the center of the property, and then over to the southeastern property, where is part of the property where there are a number of also past producers, well within trucking distance, less than 25 minutes haul to the mill in the center. You see road running right through the middle of the property there, as well as a power line. This is a hydroelectric power line, bringing over 30 megs of electricity to site. So very little, no constraints really in terms of electricity, and low cost as well. Manitoba would be the second cheapest electricity in Canada. Just a quick highlight on the mill, historically around 94% recovery. We actually have a PEA underway right now, so we're working through these factors. So far, everything's confirmed our understanding of the historic performance. We expect those results to come out probably in early 2026. We're working through it now, though. Permitted tailings facility with about 3 years of capacity still in there. The next lift is approximately $4 million to do, and that will more than triple the existing capacity. Relatively nice situation in terms of overall tailings from the property, as there's very little in there other than gold, which is exactly what we're looking for. So just looking at the mine lease area here, high level, the whole property is defined by host rock, favorable host rock, of which we have several, intersected by mineralized shear structures. So each of these light dotted blue lines represents an east-west shear structure, which is dipping to the north. And then wherever that intersects with this dark brown line, which we call the San Antonio Gabbro, or the shoreline basalt, which is that green line, and then these diacetic breccia units, which sit kind of in that light blue within that green volcanic area, all are favorable host rocks in terms of their porousness and also their reactivity to gold. All the significant gold discoveries on this belt so far have been made where those east-west shear structures are intersecting with those host rock types on there. Our exploration results to date, particularly on the San Antonio West and the San Antonio Southeast targets, have really been around where we see those intersections and where we've seen that they've been untested historically and where we've made significant progress. Both of those areas, which you'll see, are close to the existing mine infrastructure, but outside of the current resource. So these are real new discoveries. And this morning we put out an additional new target called the Shore target, which you see further to the southeast. We're planning to drill several more holes on this one from the underground. It's a little bit deeper because it's a little bit further away. It's coming into the mine as you get to the north, because all these structures dip to the northeast. So we're testing it at depth, but so far we've been able to hit it 3 times from surface, and we are finding gold mineralization. So at this point, it looks like we have 3 new targets extending alongside the mine, which we can develop into from the existing underground infrastructure. Now we're taking a look at the long section. So we're looking across the San Antonio Gabbro, that brown line that we were looking at on the previous slide, and just looking at how these different zones fit. Here you can see the Cartwright. This is a known resource up to the northwest of the mine. This has never been mined. It's actually away from the mine area, but with the San Antonio West target, which has been developed by us and is coming in, we now see a way to actually mine our way over to the Cartwright using existing infrastructure. And we've identified levels in the underground which extend over in that direction as well. So we're at a stage now where we're evaluating our long-term development plans through San Antonio West to the Cartwright, and also looking at developing new targets, drill targets from the underground into that area as well. This is wide open at depth, extending potentially well over 1 kilometer. Then you step into the main San Antonio area, which was historically mined over 1.3 million ounces just from this area alone. And then a little bit further to the southeast, you're now getting into our second target, San Antonio Southeast, which extends all the way down to level 16, which is approximately 700 meters below surface. And then as you get a little bit further southeast, it extends even further, another 200, 300 meters below level 16. And then the third target, which we put out this morning, the Shore target, is open all the way down to the deep east zone, which sits approximately 1.5 kilometers below surface. We've intersected it 3 times now, and we are about to drill that target from underground as well. As you can see, there are a number of areas we believe are open. All these red arrows represent sections where we've had high-grade intercepts historically, or we've tested down dip and have not hit kind of the end of those zones, and we believe that these areas will continue to extend. This is looking at the same view, but just highlighting intercepts from the San Antonio Southeast over here to the right. So I won't spend any more time on that, but you can see on this one, just the continuation of those high-grade intercepts and the open potential at depth. The key thing here, which we've kind of highlighted in some of our recent discussions, is the ability to start mining in the upper levels of the mine. And what that really does for us is it shortens the skip distance from the hoist down to those areas. So if we're able to start mining off of level 10 or level 16, and instead of taking ore on level 26, which is about a 3-minute haul distance to surface just through the skip going up and down, you're now looking at a skipping time of around 1 to 1.5 minutes. You've basically doubled your capacity. So when we talk about things like short-term growth potential, it's really highlighting these areas and the opportunity for us to start turning these into areas where we take ore higher up. So now we're drawing ore from the bottom part of the mine, the middle part of the mine, and the upper levels of the mine. And that's before we even start getting into Cohiba, the Hinge mine, the other ramp mines that sit on the mine site within about 3 to 5 minutes from the mill. And this is the same view, but now we're just taking a bit of an isometric screen grab. The green is highlighting the San Antonio Gabbro unit, which hosts these different target areas, also hosts the historic San Antonio mine, and the bulk of the resource, which you can see down here, which starts around between 16 and 26, which is the bottom part here, and then extends down into the deep east target area, which we've already kind of highlighted from our discussion on 007 for the Shore target. The Shore target comes in starts coming into the mine right down there at the very bottom. So you can see up from there, you've got over 1.5 kilometers of potential on that shore target. And again, now I've just layered the same view, but we've put all of the resource on. You can see stepping over here, you've got the Hinge mine, which is on a separate unit, and you've got the Cohiba mine just a little bit further to the northeast on a separate unit as well. These are all open at depth. We've identified targets, particularly below Hinge, which could extend Hinge well over 600 meters below where it currently is. A significant add, and we will be looking to drill that from underground over the next 12 months as well. Stepping back, looking at the property as a whole, you've got one central controlling feature, which is that rock mass, that pluton, which is right in the middle like a big egg, pushing the structures around it. And you can see the Wanapagao Fault running here to the north, and then all those secondary structures kind of folding off of that and coming around that pluton, feeding into the true north area, which is that top left part there, and then coming also down into that central Manitoba region down here to the southeast. This is why you see such a proliferation of gold intercepts and gold samples on surface, assays on surface down in that southeast, because you're getting everything you're finding at true north is happening again down in that southeastern part of the property. You've got 3 historic producers in that region, combined production of around 300,000 ounces. This was back in the early 1940s, but very high grade, between 11 and 13 grams per ton in those 3 mines, all only mined down to about 130 meters below surface. Compare that to true north, which is currently at 1.8 kilometers below surface and still wide open at depth. So you've got significant down dip potential on each of those mines. Plus there are numerous areas on surface that we've identified that show potential as well. And here again, you can see all the historic assays we found on surface and a summary of the historic production here. Key priority for us is going to be this Ogama Rockland resource, which sits just off the road. The road kind of comes out into this area. This is a historic 50,000 ounce producer, 11 grams per ton. Current resource, 337,000 ounces inferred at 8.1 grams per ton. We are looking to actually drill this target here before the end of the year. We're in the process of just finalizing permits, but we will look to get a drill out there and do a small 2,500 meter drill program where we see areas within the resource that can be added to and extended. And then we'll look to republish that resource in early 2026 and incorporate that into our global resource update on the entire property in the middle of the year. Historically, the issues around this property, and keep in mind this was at a much, much lower gold price, around $1,200 an ounce, when it most ran into difficulty. But the issues were not so much around the geology, but more around the style of mining that was used here. What happened was there was a big focus on producing ounces as opposed to containing costs and focusing on profitability. Our strategy is going to be to mine smaller, mine more productively in terms of having multiple working areas going at any point in time, feeding the mill from different areas, different parts of the mine, different mines, ultimately ramping up production by bringing other mines back into production around the mine lease area, and long-term bringing mines into production down in the southeastern part of the property to really make that quantum step to well over 100,000 ounces of production over the next 4 to 5 years. But in the near term, the focus is on ensuring that we don't follow the methods that were used in the past, overblasting, overmining, focusing on tons through the mill as opposed to ounces out of the mill. Our focus is going to be on much carefuler mining strategy and having the right team in place to execute on that. So the current focus for us as a company overall is we're focused more on resource growth over the next 6 months, but we are also preparing ourselves for a large test mining run in Q2 of 2026. We expect to process between 60 to 90,000 tons. We're still in the phase of finalizing those 2 targets, but if we end up doing both, we're going to be pushing close to 90,000 tons out of the mine through the mill over probably a 6-month period starting in April or May, depending on how things go, and getting that done before the end of the year. Using that not only to generate a significant amount of profit to the company, but also to reconcile our resource, prove our mining methods, show the costs, show that it's effective. We are testing a new form of mining here in terms of focusing on a narrower stope development, narrower development overall, and still staying with long hole just because of the continuity on the resource itself, but being much more selective on how we mine. And then the final output from that is also going to be to reconcile the recovery through the mill. We want to validate and verify that 94% recovery, show that it's continuous between different parts of the mine. We are going to be looking at mining 2 different areas in the underground, so processing both of them will highlight any individual differences within the host rock that we're drawing those resources out of. Coming out of that, we expect to have a PFS done by the end of the year. There will be an updated resource. We'll look to probably do that middle of the year, around Q3 probably. And that will be incorporated into that PFS. And then following that, we'll finish de-risking and development that's required to support long-term operations and get everything up and running by early 2027. Right now, I'm kind of thinking February or March timeframe for a full-time startup with just the existing shaft mine, that one that we've been focused on. And then following that, development of the ramp mines, getting those into production over 2027 and 2028, and seeing production go from a starting point of around 40 to 50,000 ounces initially, up to 70, 80,000 ounces following the recommissioning of all of those different mine operations around the mine lease area. And then long term, as we develop other areas across the project, pushing that over 100,000 ounces. The last slide really just highlighting the progress to date. We've gone through a whole cycle of rebuilding the resource, rebuilding our understanding of the property, the structural features which control the mineralization within the mine lease area in particular. Now we'll obviously look to apply that again to other areas on the property as we develop our regional exploration plan. We've been bringing in resources consistently over the last 12 months, adding to the skill sets of our team, both at the corporate level, but also more importantly on site, the people that are actually doing the work. And now we're in the phase of going underground, starting the underground drills, completing a 30,000 meter drill program, focusing primarily on resource exploration, finding new resources underground, extending that San Antonio Southeast, that San Antonio West, and that shore target that we've just discovered further at depth, and seeing how those come in. Start to put our mine plans around those as well over the next 12 months and see how we can fit those into that PFS. How much of that can we get into that resource update? And then the other piece is really going to be about drilling out those 2 bulk sample target areas that we're scheduled to mine next year. Do the delineation drilling, tightening up the drill spacing from 25 to 15 meter spacing. And then we've identified a number of areas where the resource itself, the 1.1 million ounce gold resource, is open. And we're going to be extending those resource areas and adding to that mineral resource inventory over the next 12 months as well, in conjunction with that projected mineral resource update due out next year. And we won't stop there. We will continue thereafter, keep drilling, keep focusing on growing the potential, exploring and expanding the existing resource that we've got, and looking for new resources across the property. We see a lot of potential on this belt for significant upside. Both with just in the mine lease area itself, which we're operating in right now, but also that regional belt. We haven't even touched on some of the other areas that are longer term quite prospective based on data that we've got, LiDAR, aeromag, surface samples, all that information we've got in our toolkit, and we'll be looking to use that to make further discoveries across the Rice Lake property. And at this point, I'd like to kind of hand it off. We'll probably do some Q&A, and I'll do my best to answer these questions as we go. I'll put my glasses on so I can read properly too. So the first question, obviously I gave a long list of things that we plan to do or need to do, and it's how much financing do we need to do to get to cash flow positive? Not to say the whole business strategy relies on gold price, but at this gold price, this was cash flow positive a while ago. But to get this into operation and answer the question, we're in the process of raising around $17.5 million right now. This is an equity financing. We expect those funds to see us right into that first bulk sample target area. We are looking at potentially raising a bit more funds. We're exploring different types of financing for that to carry us right through that bulk sample target area plan next year. And then following that, we expect to generate around $45 to $50 million of cash flow from that test mining. We see that as potentially funding the rest of the restart of the operation. So just to answer precisely, we've always kind of put a $40 to $50 million price tag on a complete restart of the mine and getting all the other mines up and running and ready to go, as well as the mill. So we still have that target in mind. The PEA that we're working through right now will really help finalize and crystallize that number for us as well. But obviously significantly less than what you would see in a complete, brand new build. The next question is, what is your minimum viable restart plan for True North, throughput, CapEx with contingency, steady state, all in sustaining costs, and at what gold price and IRR would you commit to construction without issuing more dilutive equity? So I kind of captured a little bit of this in the last question. The components that I didn't really address, CapEx obviously focused on rehabilitating the mill, getting some areas, electrical piping, cleaning out the tanks, relining tanks. We need to put a new crushing circuit in. That doesn't have to happen before the bulk sample. We think we can use a mobile unit for that. But coming through that and into the restart, we want to have a brand new crushing facility, one that gets fed right off the head frame like it used to back in the 1960s. They were actually doing it better then, as opposed to trucking it down to a tent and then conveying it up there. We see the need for more underground development. But at this stage, I'm comfortable in saying that we've already made the decision to go ahead. We're committing to this restart. We're committing to that 15, 16-month time frame to get this operational. Obviously, the test mining run next year is going to confirm and validate our work, and we'll make a decision coming out of that whether or not we defer startup a little longer, but I don't see that currently being the case. I expect actually more likely our work to accelerate coming out of that. So I think we're in a good position at this point. The next question is, who is the strategic investors? Now, obviously, some of them can't be named. Otherwise, I'd name them. The key investor really is that Eric Sprott. Some of our historic institutional investors would be Dundee. They're still in there. You've got a large fund out of the US called Libra that's taken a very large position in us. We have a Bestcore, which is a pension fund. But those are all smaller. Those are around 5-6% positions. So really for us right now, it's that Eric Sprott position. We do have a mid-tier gold. We actually have 2 mid-tier gold producers in there, but at this point, their positions are small, more around 5.5% for one, and then the other one would be more around 2.5%. So not really strategic at this point, but continuing to be supportive of the strategy. So we're still obviously looking for any other partners, but not needing them at the moment. How many meters of infill drilling would be required to bring the inferred ounces into the indicated? Can you speak to your plans to do just that? So for that question specifically, I would want to bring McKelly on, but I would say to tighten up the inferred drilling to measured means, or to indicated first means bringing it from 50 to 25 meters. So you're basically looking at probably around 50 to 60,000 meters of drilling for that level of work. And some of that is what we're going to be doing over the next 12 months. So we're looking to get as much of that upgraded as we can. But we're still really focusing on growth potential because with these underground mines, you tend to mine your way into the resource and build it as you go, maintaining always a constant churn of $2 to $3 million or 2 to 3 million ounce resource. So our plans, which I kind of talked about a little bit already, is to grow the potential, do some infill, but do as much growth as we can over the next 12 months. And then following the PEA and leading into the PFS, really focusing on that delineation drilling. So I'd say from probably May, June time period on, you're going to see a lot more resource upgrade as we get closer to restart. The areas we're test mining next year are actually indicated resource, so they're already pretty tightly drilled. As I said earlier, we're taking that from 25 meters down to 15 meters. So that's about 8,000 meters of drilling on those areas. OPEX and CapEx, please speak to any cost creep and what investors should expect. I think so I don't want this to age poorly, but CapEx is probably a lower risk here. We have a very defined set of capital requirements to get to the restart. I expect any variations in those potentially influenced by the market, but the variances should be around 10 to 15% from what we're estimating. OpEx is obviously going to be an ongoing situation that we'll need to continue to evaluate. We expect our all-in costs to be somewhere around $1,750 to $1,800 US an ounce, and that may vary, it may creep up depending on fuel costs. Keep in mind that the key component of our cost structure here is electricity. That's fixed, it's not going to change. It's low cost, so really the variable factors are going to be on things like labor, other inputs to the milling process, and some of the consumables in the underground. So the impact of those should be significantly smaller, as long as 40 to 50% of our cost structure is still that hydroelectric. And that's about all I've got time for, I think, today. So I'd like to wrap it up, but any other questions, you want to have a discussion later, I am available over the next couple of days.